Hi friends, Simit here from InformedTrades.com. Today is June 25th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I put on in the markets, all as part of helping traders learn my style of trading, price action swing trading, the Forex market. If those terms are unfamiliar to you, or if any of the terms I'm using, I'll be reviewing some ideas kind of quickly. If any of that's unfamiliar to you, check out InformedTrades.com. We have a huge archive of learning material. Register as a member, ask questions, share your knowledge, and we can all learn together. Set up a practice account, share your trades. We can learn together. You can learn from my successes, learn from my mistakes as well in these videos. Okay, let's get to the charts. On the screen right now, we'll come back. On the screen right now is euro dollar. Let's come back to that. Let's go to gold real quickly as we usually start. As I've mentioned before, basically in all these videos, gold is where I have the bulk of my long-term capital, where I'm really most heavily invested. So I'm just watching it from that perspective, and like I mentioned, I'm still accumulating a little bit more. I'll probably will be done accumulating by the end of this year. I do expect gold to make considerably new. We'll go well past the highs we set in September 2011. In the long term, on a 10 or 15-year basis, is sort of what I'm looking for. I think by 2020 we'll probably have surpassed the highs that we saw in 2011. That's my take based on the fundamentals and the technicals. In terms of the near term, just watching the day-to-day, we're still holding above the 200 exponential moving average, so that's favorable for the bulls. We're still in this range. The bears really want to. I think it's fairly important, especially now that we're above the 50 and simple 200 exponential moving average, for the bears, if they wish to hold their ground, to defend. What is this level here? 1326. This rectangle that we're in, this resistance level that was sort of established here, April 11th. You could also argue it was established here, February 28th. Generally, this basic area, again here in March. If we close above this rectangle, like I've mentioned, I think that sets the stage for a potentially quick move up to 1380, right around there. There'll be some resistance probably at 1350. But I don't see that as too formidable, especially since we're above the 50 and 200 simple and exponential moving averages. So that's gold. Bitcoin, a couple down days in a row. We're in logarithmic view. That's good. I should turn that off for other assets. We are now at the 50 simple moving average. I think this is a potentially interesting buying opportunity, especially if we look at this level here, 544. There's sort of resistance there. I bought at 525, so right around here. I think in this general vicinity is an interesting buying opportunity. I think if we fall below 510, I think then it's or 500. I think then maybe the bears have the upper hand. But so far, this is just we were in an uptrend, a big move from here all the way up to here. Now we've pulled back a little bit. I think this is a good opportunity for a swing trader to enter on this dip here. If we go much lower here, that shows that it was a bear move and not really just a pullback in an uptrend. So interesting technicals on Bitcoin. I've only bought a little bit because I'm sort of using it as an educated lottery ticket. If it goes to zero, that's obviously that's not preferable, but it's not a huge loss to me. I won't lose any sleep over it, and there is an off chance that it goes considerably higher. So that's the lottery ticket. Okay, now euro dollar. Some unfortunate news for me. My trade got stopped out on euro dollar today. So that's no fun, but part of losing trades are a cost of the business of finding the winners. You need to explore on some of the losers, or almost any method won't have a 100% win rate, so you need to factor that in. And many methods, including mine, will have a less than 50% win rate. But the wins are much bigger than the losses, which makes up for it. Of course, you want the sweet spot, and sort of what we're all striving for is a very high win rate and a very large reward risk, so that we have big wins on many trades. That's sort of what we're all continually improving, or iterating towards, trying to make our systems, our approaches better to get to that point. In any event, euro dollar has hit my stop loss, so that's that. I think the logic I had was still pretty sound on this trade, so I'm pretty content with it. I'll be thinking about it a bit more One thing that I do want to think about in terms of one of the next steps in improving my trading strategy, and I mentioned this before, I haven't found the right edit that is needed, is when a trade has gone a certain amount of time, 3 days, 4 days, I don't know, I really need to take a closer look at the numbers, and it hasn't moved to break even. So if it's just stalling, that may be grounds for me to close the trade out. So there's basically a certain amount of time where if I'm not able to move my stop to break even, it's really low probability that it's going to go in my favor. I need to do a little bit more mathematical research on that. But I think there's an opportunity in there for me to know, for instance, I entered this trade on June 20th, so today is June 25th, so perhaps over the past couple days I should have realized, the market's stalling here, it's not really, the odds are now, in light of how much time has passed, the odds are not really that favorable for the market to go in my direction. So that's something to think about, but my euro dollar position has been stopped out. Euro yen. Okay, this is a pretty interesting formation, and I want to do another video on the yen after this, but basically the yen has not been moving. The Bank of Japan I think we're at a major inflection point in the yen. So that's really interesting. Part of me actually wants to go long here, euro yen, or short the yen, but we'll see. Technically, I think the logic is still sound. We have a 1, 2, 3. Assuming today is the same, we'll have 4 straight dojis in the midst of what could be interpreted as a downtrend. So we'll see. I might close this trade out early. I'm not sure yet because it's not looking that favorable. So something to think about. But for now, the trade is on and it's basically at break even. Okay. Now, 2 orders that I have on, and well, let's actually go with the order that was put on yesterday, or no, this was put on a while ago, but it might get filled, or a couple days ago, but it might get filled now. Aussie Kiwi going long this pair. We're sort of near the bottom of the price channel here, but we're also at between a 50 and 61.8 Fibonacci retracement. We're below. Well, that's the thing. This trade is. We are below the 50-simple moving average here, and the 200 exponential moving average is above us. I do need to think a little bit about how much I give weight to price relative to the moving average. Generally, if price is near the 50-simple moving average, I'm willing to go long or short. But in this instance, price is below the 50, which in turn is below the 200. This could be viewed as a pretty bearish sign. Get out of logarithmic view there. But I'm set to go long here. We do have a pattern of higher lows in place as well. So my order either has gotten filled or is very, very close to getting filled, 1 or 2 pips away. I'm set to go long here. This black line, my stop is this red line, target profit up here. So 07.55 to 07.08, risking about, what's that, 47 pips. Target profit at 08.88, so that is 325 pips. So really solid reward risk here. The logic is we have a pattern of higher lows. We're near the bottom of a price channel, and we pull back to the support level. It's been a 50% retracement to Fibonacci retracement from this swing low to this swing high. So we have a number of signs for a pullback. The one cause for concern is that we're below the 50-simple moving average and below the 200 exponential moving average. So that's something that I don't know. Well, that was the case when I put the trade in a couple days ago. So that's something to think about. And if this trade doesn't work, that'll be definitely something that I think more carefully about moving averages. I do need to, in general, that's something I need to refine in my trading approach. Aussie Swiss. This is another order where I get long. One thing I do like to see signs to go long on Aussie Swiss and Aussie Kiwi. So when I see that on multiple pairs, that leads me to think that there's a reversal forming in the Australian dollar. Now here, again, we're at a 61.8 Fibonacci retracement from this swing low, June 3rd, to the swing high here, June 12th. We're still at, prices above the 50 simple moving average and the 200 exponential moving average. And that's sort of where we're at. So I set my order to go long at 83.56, which is also a resistance level, you could argue, that was established May 16th and reestablished May 30th, right here, and right here. So set to go long at 83.56. That's the resistance level that was established in May, a 61.8 Fibonacci retracement level, and right above the 50 simple moving average. My stop is at 83.16. So if price cannot defend, if the 50 simple moving average can't result in a reversal, really I think the stop could be even tighter. But just wanted to give myself a little bit of a cushion, expecting the bulls to defend this level here. If it doesn't, price will hit 83.16. I'll get stopped out. My target profit is at 84.76. Which is a resistance level that was established June 12th, the high there. So on this trade, I'm risking 40 pips to gain 120. So reward risk of 3 to 1. And that's about it. That's where I stand. So I had a loss this morning, but June so far is a really good month for me. I am up about 3.7% for the month of June, 1.5% for the year to date. So obviously that's not great, but it leaves me in a good position, I feel, to for the end of the year, for the remainder of the year, and hopefully I can get a couple of good months, and we'll be doing well. Risk is controlled, so that's good, and I'm making improvement, which is the most important thing, at least in my opinion, my perspective. That's about it. Any questions you have, join us at InformedTrades.com. Best of luck in your trading, and we will see you tomorrow. Take care.